Okay, let's talk about payment processing. So last year, I went to this networking event to represent Helcim. And there, I had the chance to speak with a bunch of different business owners. Now, one question kept coming up. People kept asking, how does your pricing model work? Now, I'd start my answers in the same way. I'd say, we use Interchange Plus pricing. Now, when I'd say this, I'd look at their face to see whether they comprehended. And oftentimes, they looked a little confused. Something like, huh? Now, feeling the weight of their confusion, I started to ramble to fill in the gaps. Well, you see, payment processing rates are made up of multiple parts, and one of those parts is called interchange. And the thing with interchange is that it doesn't stay the same. It actually fluctuates depending on... And then at that point, I'd realize I'd lost them. You see, I knew Helcim's pricing model had the potential to save them a great deal of money. I just didn't know how to explain why. And so today, I'm making this video for that past version of myself to get the point across. I'm gonna try and boil down Interchange Plus pricing into two simple parts: transparency and scalability. Let's have a crack at it. So transparency has become a bit of a buzzword in business, especially with payments companies. But what does that actually mean? Well, one way to define it is that as a customer, you can see exactly what's going on and then why certain decisions are made. Let's look at how this applies to your payment processing fees. So let's say that every time you make a sale, a pie is made. So if the sale is $100, the payment processor takes a slice of that pie. Now, for the sake of this example, let's just say that's 2.9% of the full sale amount. This is a rate that you'll see commonly across the industry. So out of the $100, you get $97.10, and then $2.90 goes to the payment processor. Now, what actually happens with that fee? Well, let's follow the trail. So the $2.90 is utilized for two things. So you have the cost of the transaction, and then there's a markup. So remember, the payment processing company is a business as well. And just like your business, there's costs to providing a service, and then you need to add a little bit extra on top so that you know that you're generating profit. Now, in the payments industry, this cost goes towards the banks and then the card networks, so MasterCard, Visa, Amex. Now, the markup is what the payments company uses to pay their operating costs. And then with any luck, they'll generate some profit on top of that. Now, let's say you wanted to look at this picture and make it feel transparent. What would you need to make that happen? Well, if you ask me, I would like to know, how did they come up with this percentage that they're charging me for this sale? Now, if this was your business, maybe you'd look at it this way. Okay, how much does it cost me to process the transaction? Let's say that's $1.50. And then at that point, maybe you decide, okay, how much should I charge in order to produce a certain amount of markup? So it turns out it's not as simple as this. Why? Because that cost portion actually fluctuates. So imagine these are 5 different transactions, and each one of them has a different cost that's being paid to the bank and the card networks. Well, turns out the cost actually fluctuates depending on the type of card being used. So for instance, if a customer uses a debit card, they generally cost far less than another customer that uses a premium corporate MasterCard. Now, someone who uses a more standard MasterCard with less rewards would fall somewhere in the middle. Now, some of the biggest payment processors out there, Square, Stripe, PayPal, they all use what's called a flat rate pricing model. This is how it looks. So essentially what they do is they charge one single rate that goes across all the transactions. And their rationale is that they're keeping things simple and predictable for the business owners that work with them. The consequence here is that if you're that business owner standing on top of all this, it's really hard to see underneath and behind the scenes. So you can't tell if that markup is being inflated because of a lower cost processing method. It's not so transparent, right? Well, what's the alternative? How do we make this look more transparent? Well, what if we started with the markup and kept that stable across all the transactions? What would that look like? Well, in this picture, if you're that little person again, you actually now have the opportunity to see exactly where your fees are going. What's cooler is that if for a given transaction, the cost goes down, you actually can step down with that. You end up paying less. Now on the flip side, if the cost of the transaction goes up, you would then rise up to meet it. You'd pay a little bit more. But the point is you wouldn't stay there. You would only pay exactly what you needed to pay per transaction. This is how Interchange Plus pricing works. Now you might be thinking, transparency is great and all, but how does this actually save me money? Well, let me walk you through an example. But first, are you finding value in having payments explained to you in an open, honest, and detailed way? Well, we've made a free ebook called Understanding Payments that can serve as a go-to resource for any business owner curious about payments. It covers everything from the basics of how payments work, to avoiding hidden fees, all the way to protecting your business from fraud or chargebacks. If you want this free resource, click the link in the description below. Okay, back to the Interchange Plus example. So if I'm this person here, how do I actually save money? This brings us to our second word, scalability. Now, why is scalability so key? Because with Interchange Plus, you're actually rewarded with more savings as your business grows bigger. This can be attributed to two different things. First is the rule of large numbers. So if you recall from earlier, the cost portion of each transaction fee actually grows and shrinks depending on what type of card is being used. Now, as your business grows bigger and you start to process more and more transactions, you start to see a more predictable mix of cards coming in. So these little lines represent the interchange costs for each of the cards you process. 40% are debit, 40% are standard credit, and then 20% are those premium high rewards corporate cards. What ends up happening is that even though there are spikes in cost here, like this one for example, let's say this is an Amex corporate, because the majority of your transactions are still happening in this realm, you end up with an average cost that ends up being relatively manageable. So what's essentially happening is that due to the law of averages, your overall cost gets pulled down as you process more because your mix of cards become more predictable. The second thing that contributes to scalability is what's called volume discounts. Now, because in Interchange Plus, the cost is distinct from the markup, we actually unlock another incentive. Interchange Plus providers, like Helcim, want to see your business grow and process more. This is because the markup is relatively low for us. And so as you process more transactions, it actually helps us generate more revenue. Because of this, we actually lower your markup even more as you hit certain milestones of processing. So what this looks like is, as you process more, this markup gets lower and lower. The end result is all of these pillars, all these fees that we're paying are brought down in cost. And that alone could save you thousands of dollars a year. With these two things working together, if you're processing, let's say 100K in monthly sales, you could see your effective processing rate decrease to less than 1.5%. That's far better than continuing to pay Square or Stripe that 2.5 or 2.9%, which will continue to inflate your fees as you grow. Now, keeping things real, over the last few minutes, we've just barely scratched the surface with Interchange Plus. But I hope that this short video helped you understand at least the core benefits of Interchange Plus and why we chose to build our business around it. Because at the end of the day, our belief is that payment processing should be transparent and scalable so that your business isn't punished for growing and becoming more successful. And outro. If this video was your first exposure to Helcim, then a great next step is to calculate how much you'd save if you switched to us. You can do this with our free statement comparison tool. It only takes 3 steps. First, tell us how much you're currently paying with your payment processor. Then, give us a sense of how much of your transactions are online versus in person. Then enter some numbers of how much you process from your statement of each card type. At the end, you'll end up with a number that's representative of how much you'd save with an Interchange Plus model. If you're interested, click the link in the description below.